E from marketwizards.com and eminingwizard.com. About 20 minutes after 11 on the 9th of April 2019, reminding traders to use risk capital you can afford to lose. All right, we're taking a look at an OTF type chart. And we've done the same thing that we had talked about before about third time through trades. We've set that up on today's range, 1, 2, 3, the third time through, the plunge, take out the low from yesterday, try to find support. So far, the 80 is holding. We suggested 78 for stop. And we thought that range, that might be a 10-point range that needs to get resolved. Almost every day you will get a 40 back, 40, 50, 60. And a reminder, in this relationship, your 40 back is going to be right here at third line up. 1, 2, 3. So this is your 40 back. The middle is your 50 back, and the 60 back is here, pretty close to our half gap idea, which I'm considering as resistance for now. And step by step, what we're looking for is one box at a time, and we know intraday these boxes can certainly travel 5 or 6 or 7 or 8 boxes easily. Not as easy when you get to the deeper type charts. So we know we've already had a 3-box move, correct? And I said anybody that's hitting that 88, 87 zone, make sure you are paid coming into this 83 to 82. So I'm using this chart to help judge that type of trade, assuming it's not coming out the bottom. It could, but I'm assuming the conservative stance that, okay, let's just think conservatively and try to make a few points in a tight range type trade. So now we want to think a little bit more defensively and say, well, that must be resistance. This must be our fighting box, and this is the 3-box system, basically, where we keep moving those ideas to help show us the next potential ranges that need to be resolved. So this is a 2-day range, but it's also an intraday range, so it's an important chart right now. And here's one with moving averages that will help us to understand perhaps timing ideas. And you've got to beat the blue line first, and then first time back usually tough. And then this relationship, pretty important right now, the green and red lines trying to support, and this one trying to say no. And then you can go back and look at a deeper chart with the same ideas that you've just been using and saying, okay, so where currently in a 10-minute chart is my resistance? And it's back here. And this will continue to come down. And for now, you have to beat the green and the red line on a 10-minute basis. And you want the 15, which is our normal chart. And you've got to be able to say, okay, I'm still waiting for the red line, still waiting for the blue line to come down, and tells me that I'm ahead of myself. So all of the charts are important. You try to interpret them, and that's what gives meaning. All of this is just are things that we construct to help give us meaning and timing ideas. Sure, I'll be happy to. So on a percentage basis, where are we looking to see something like a Fibonacci type idea? So when I'm referring to those ideas, can you see it on this chart? Does it tell you that? Not really. It'll show you the standard deviations, VWAP, things like that, volume profile, but it's not necessarily Fibonacci type ideas. So all of the charts are helpful, and in truth, they're things that we concoct to try to help ourselves understand the markets and market structure. Okay, so to answer your question, when I refer to 40 back and 60 backs, you're having a problem grasping that. What I'm suggesting is that this was the starting point, and for now, we know that this has come all the way down to the 80, the bottom, correct? Is that true, right? Come all the way down to here. So if we get a bounce, we want to get an approximate measure of how far it bounces back in the range. And normally you're going to expect at least a 40 back every day. So that's the minimum target that you would expect on a bounce if the low is in. And that's a big if because we never know. But if the low is in, then that's the bounce target first. And obviously, first things first, once you get this new low at 80, your first target is right here, 82.5. Your second target is right here at this 85. And then this becomes your next in a 3-box system, 1, 2, 3. So that is your normal weak pullback. By weak, I'm spelling that in details. The devil is in the details, but W-E-A-K, weak. So weak pullback. Your normal pullback is 50. And then a deeper pullback gets you back here. And if you get back here, then the assumption is probably that the low is in already for the day. And if you only get here, then you can assume, well, maybe we're not done. Because really, they couldn't even get this thing up here, to the 50. So that's how I interpret that. And if you do get it back up in here, then you're going to assume that this is going to be your battle. Well, let's just, for the sake of argument, say that we get it back to 90, right? So if you get this thrust, then you could also get a counter thrust as profits are taking, and then you would be expecting this 85 zone to be a key, because staying above it tells you the longs still have the ball. Getting back below it tells you, okay, well, good second entry. Still a range trade until you take out the low. But if you get a deeper back here, it tells you that shorts still have some power. So that's the way I try to interpret that. And because we went from high to low bounces, you should be able to hit. With no idea that it's going to come out the bottom, just a trend trade for the day's range, trying to test support. And if you can't make new lows, then it kind of gives the edge to the longs for saying, you guys aren't as strong as you were earlier. I think I can still buy. Bot says I can still try to get back up here and get to my half gap trade. I mean, this is the controlling high right now, no doubt in my mind. You got to beat that if you're a long. This retest back up here, the half gap area. So important idea. Hope that helps. Does that help? Yes, correct. Yeah, you want me to get a copy of this later? I'll draw one up because I don't think I can do that without, all of these disappearing. But let me see. I've also got this on video for you, so you can learn from that. All right, so putting this into perspective, and really you need to do this in multiple directions, but you look at ideas like stops and whatever. Now, I'm going to put this one on a 30 just for a minute or two, but take a look at this idea as we wrap up. So this thrust was here, and this is last week's range, and then we come back, and we're looking at a 40 back at 77 to 78. And don't forget, I've skewed this by coming back to the gap rather than just that low. So that makes a difference. Some traders won't do that, and they'll be looking at this very importantly as that 40 back area. And then your 50 back would be back here at that 69, 71 area. Remember how important those were? And then back here at 62 would be a 60 back. So going forwards, we want to keep an eye on this chart with those ideas. Let me take a quick peek at this on a 30. As things catch your eye, you want to make note of them. So in a chart like this, you can also see, patterns like a three little Indian thing, right? You want to catch these ideas. 1, 2, 3. So far, this doji bar that's very innocent looking right there, that bar is still, those traders are still above water, and that 80 to 78 area is being defended for now. So your 4 is really down here in this relationship, and 5 and 6. Based on these smaller time frames. So this platform, again, what we started to work on yesterday, this third time through, work today in the opposite direction. It happens a lot, just does. So pay attention and learn that one. And it doesn't guarantee that you're going to come all the way down here. Don't get me wrong. On that break, you're looking, all these are white bars. So this becomes your support, as I had suggested. That could get tested. And then I said our next squeeze pivot is yesterday's low. When you take that out, then you open the door to test these next lower lows. And in a crash type move, this is very important. That's the way you're going to do it. You're going to keep looking next, where's next support? That's the way you do it. And that's why I like charts, because you can see on a chart the emotions of the traders that are getting stopped out. Simple as that. I hope that helps. And let's take one more look at the intraday range. We have had a very tight range right now. Moving averages will help you with the timing, but we've kind of nailed the range we thought we were going to get the consolidation in. Been very, if you missed the opening move coming down and jumped in, the contra move is a reasonable move. It's done just as well as anybody playing the short side and holding on to trailers. But the fast moves have been down. Bang, bang. Do it one or two of those and you're out of here. Thank you, Zeke. So Zeke is thinking maybe worth trading at lunch. For those of you who want to do that, that's coming up. I'm going to take a break. Been at this for a while, and I find that My ability to understand the market diminishes as I stay here without taking a break. You just kind of get stale. You need to walk around and clear your head and then come back and say, okay, what's next? And things will jump out at you. Let me read. Thank you, Sean. I'm reading your post. Okay, good. And thank you for doing that homework I asked you to do. And that was for your benefit, not for mine, for you to start to see the things and holes in the patterns because we all have blind spots. And a lot of those ideas were posted, and sometimes we just miss them. So why don't you go back and review the material and say, okay, what did I miss? These type of patterns happen over and over and over. And you don't try to guess them, but you try to become aware of them as they're happening. And see, in my opinion, this area right here, this 93 to 92 should have held if the bulls were as strong as we thought they were to, to hold that pivot and then try to get up here and do that breakout, take out yesterday's high, and then tackle those next couple of resistance. When they can't do that and it starts to fall, you say, okay, trap soldiers here and they're going to be paying up. And then we come back in, and right now we found temporary support. So the whole point of trading is to understand the day trade fits into the OTF. And you cannot be a good day trader if you cannot understand what the OTF traders are doing. This is our daily model. We can see clearly how this has supported us and how this has resisted us. And we can clearly see it if we go to the OTF chart, how we've stopped up here at the extreme. And we're still in the extreme, in the top box, haven't come backwards. But we know based on this chart that we're hitting an area of resistance. And rightfully so, that we're pulling back a bit because this has been a long swing. So we said, do you buy support? And if you buy support, and we said we're going to miss the top. If you're a trader that's always trying to just buy the highs, you're going to miss some of that swing. But you sense these intraday swings and fit them into these bigger OTF patterns. Simple as that. Hope that helps. No worries, Sean. Don't forget, this takes a long time to grasp. It's not like this is something you can pick up in 5 minutes. I'm glad you're studying it. I'll catch you guys in the Slack room. Hope you had a good morning.